Hello, welcome friends. My name is Avinash Gorakshekar and I welcome all of you to another interesting episode of Konexio HighFlyers. Friends, as all of us are aware, in these episodes we introduce to you emerging companies from emerging sectors, and we make it a point to talk to the promoters and the top managements of such companies so that all of us can understand such companies in a much better way. We get to know about the company's business model, their growth journey, their future growth plans, and in this process, a lot of valuable information is shared by the promoters, top management with us, and that helps all our investors to take a very conscious call when they invest in such companies. And friends, today we are going to talk about another interesting company which is going to hit the capital market very soon. The company's name is Citichem India Limited, and we have the promoter and executive director of the company, Mr. Hasim Merchant.
Hello, good afternoon.
Yeah, good afternoon, Hasimji. I think welcome to the show. And sir, it's a pleasure for me to talk to you. Sir, it will be very interesting to know about your company. In fact,
Likewise, sir, it's an honor to be on your show. Thank you so much for having us on your show.
so first question, Hashimji, which I would like to ask you is that if you could tell us something about, our company's business model. First of all, is this a first generation business, or did your father actually start this and then, you gradually took over the operations? And what is the positioning of our company in the domestic market? And, if you could just tell us something about the business journey. How did it start? How did you and your family get into this business? Sir, if you could please share your thoughts on these points.
Sure. So, our company was started in 1992 by my father. My father had the chemical roots since my grandfather was in the chemical industry, servicing logistics and freight forwarding services to various manufacturing companies based out of India. So that's where we had the roots, and this company was initiated in 1992, and the primary focus was distribution of chloroalkali products like caustic soda flakes and caustic soda lye, wherein there were only a few companies manufacturing at that point of time, like Gujarat Alkalis and Chemicals Limited. So our company used to be the authorized agent and distributor for the Maharashtra and Western region for their chemical products, primarily caustic soda flakes and caustic soda lye. Then over a period of 15 years, 20 years that we've been associated with other manufacturing companies of chloroalkali products as well. There were various other value-added products added to the kitty which were associated and byproducts of the same industry. So we got the opportunity to expand our product portfolio and get into the distribution of those products as well. But since the manufacturing companies increased their production capacities and their product portfolio, obviously the competition also simultaneously increased, because they had that policy of appointing various distributors for various regions. So in that case, there wasn't any monopoly kind of a business that we were getting into. But since it was going on for almost decades, we continued that business and let it be. But at the same time, we also introduced other product portfolios, other products in our portfolio which were associated with the food chemical industry, wherein the margins are also much better. Maybe the demand and consumption at that point of time in 2017-18, when we introduced those products, was not as much as compared to now, because the whole industry of food has evolved in the last 10 years. So the consumption of food chemicals, food preservatives, food colors, all these things have increased. And since we are having a few products related to the portfolio, food chemical portfolio, that we specialized in over a period of the last 5 years, we are now wanting to get into the retail market of those products and cater to various general kirana stores where these products are sold, because eventually the bulk is packaged into smaller packaging and then sold by retailers to end consumers. So now we want to fill in that gap, and we want to develop our own brand, and we want to take this forward, wherein the gross margins in the retail sector are much higher. And
Okay.
for that reason, I think the main focus right now for the next couple of years will be to expand the food product portfolio. We are also setting up R&D for other waste recycling, waste to chemical products, which hopefully we'll try and develop some products in the coming time, and we shall have that shared with our audience as well.
Okay. Fine, fine. I think Hashimji very nicely articulated. Now, tell me one thing. On the retail side, you mentioned that you all want to get into the retail segment. So for that, what have been the kind of marketing, effort which the company has put in? Like, has this been planned on the drawing board, or has some effort already got into action? Like, are you, present
See, see,
currently on the
obviously,
B2B?
obviously, see, obviously, for some action, there has to be some planning. That's what we firmly believe in. So, there has been a lot of planning and research gone in the last 2 years in trying to set up something which is going to be beneficial for us and be helpful for us in terms of brand creations, distribution network, franchising, reaching out to the mass network of retailers. So for that, we've already made certain scheduled plans, which for which is one of the main reasons we're actually coming up with this IPO, because the main focus is to develop our own infrastructure, our own fulfillment center, our own processing and manufacturing facilities, as well as create a fleet of our own vehicles to cater to and manage and reach out to the retailers in the best way possible and the most economical way, parallelly creating an asset base for the company as well.
Okay. Understood. Hashimji, now tell me one thing. Within your customer base, you mentioned chemicals, and then you said food processing, food products. So now tell me, apart from these two sectors, any other sector where you all deal with some sort of chemicals?
See, waste to
Because I
recycling.
just
See,
wanted to understand which sectors you all cover, like.
see, being a trading company, we've tried our hands on various chemical products, be it chloroalkali products, be it pharmaceutical products, be it APIs or acids or dyes or intermediates. So in a journey of 30 years, we've dealt in over 500 SKUs. But there are prime 20 products that you specialize in, and out of which you're strong in five. But
Okay.
the strongest five products have too much competition, wherein the margin realization is not as much, because
Yeah.
it's a universal products. Those products cater to any and every industry, whether be it aluminium, steel, dairy, textile, dyes, soap making, detergent making. So this is a universal product which every industry requires. So the number of requirement, the supplier demand and the buyer's demand is equivalent. So there is no monopoly or any specialized margin apart from the commissions that the company offers you.
Okay.
So now we want to
Understood.
get into products. Now we want to get into products which are, the food products that we've identified to distribute. There are no manufacturers based out of India. So we are going to be having strategic tie-ups with global partners. And global partners require that kind of infrastructure and your distribution network or your setup of that kind for them to tie up with you for distribution of their material, bought in bulk from them and distributed in retail packaging here to the mass market.
Yeah.
So
Okay.
we are going to be the intermediary.
Okay. Understood. I think again very nicely mentioned by you. In fact, Hashim, now you mentioned that there are some products which you all will be the only players, and there is not any other player. Tell us one thing, that in terms of the domestic market opportunity for the kind of chemical products you all cater to. I mean, how big is that opportunity? Like you all have got a 30 years kind of legacy. In the next say 3 to 5 years, what are the kind of plans which the company has, and how will the company benefit out of the growth which is going to come from this growth in the overall market? So any thoughts on that? How you want to strategize your company? How you want to make it grow faster? Sir, some
See,
thoughts on
we
this,
we
please.
we do we do have a very robust expansion plan set up, which is phased out in a timely manner. So the first 2 years would be focused on creating the right infrastructure with the right digital requirement for data collection, uh, and the kind of the team and the fleet required. The main focus is going to be there to set up and have strategic partnerships, and the following 3 years would be aggressive expansion and trying to reach out to the nearest store possible for any consumer, because the market is open. The products that we are talking about is basically every household item that we talk about. So, products like Ajinomoto monosodium glutamate, products like citric acid, products like soda bicarb, these are chemical products which sound like, some chemical formula, but they are actually food products which are consumed on a daily basis. So salt also is a chemical product. It's sodium chloride, which is a chemical name, and it's been used in every household as salt. And being in this industry, we understand that the market is huge. And if we have the right strategies put in place with the right infrastructure and the right network, we can achieve major market share in a very short span, because the demand is already there. We just have to fill in the gap and try and service the consumer with the best possible lowest rates for him to tie up with you, and continue and keep growing the business as and when the industry is growing.
Okay, understood. Ashimji, now tell me one thing in terms of the number of customers. Since you have a 30-year-old legacy, you all are dealing with chemicals for a very long time. Roughly, what could be the active customer base currently which the company enjoys? Typically across product categories. I mean, a kind of a
See,
rough cut
like I
kind of
said,
number you
products.
do for us.
See, like I said, the products that we deal in are universal products which cater to various industries. Now, so far, we've been catering to traders and suppliers, who in turn supply to consumers and
Okay.
manufacturers.
Okay.
So we have a network of more than 200 vendors that we have been associated and worked with.
Okay.
And every vendor has their own set of clients and their own set of network and their own set of contracts. And subsequently, likewise, we have our sourcing in place. And as and when the orders are received, we cater to their deliveries, and we try and give them the best services possible as far as fulfillment is also concerned. But now, since it's outsourced, and we want to convert that outsourced services to our in-house facilities, and try and provide better services in a better turnaround time, and at the same
Okay.
time the company also leverages out of it.
Okay. Okay. Understood. Ashimji, in terms of pricing, since we deal in a trading business, typically tell me for any contract or any new order, how is the pricing mechanism decided? Is it based on volume or is it based on availability? I mean, how does the pricing work? For example, you
See,
get a
it's a
new
supply.
order. How does the pricing work for, let's say, a new customer and for an existing customer? If you could give us a small kind of example.
To be honest, the times have changed. Earlier there used to be bulk orders which were fulfilled over a period of time, but now those strategies have changed. It's mainly trying to work on an order based model, wherein we have a fixed quota of material supplied by manufacturers to us. So based on that quota, the supply and demand at that point of time, there is a lot of volatility in the products, if I would say, because at times the product cost would vary from 25 rupees to 65 rupees. Like, for instance, in COVID period, if you would see, the revenues had been on a very higher side, but that was considering the value of the products that we deal in had gone up threefolds. So our average business is between 20 to 25 crores, but during that period, it had three times more, was because
Okay.
of the volatility of the price. So the
Correct.
products that an average price would be between 25 to 30 rupees were selling at 65 to 70 rupees
Okay.
on a lower side. And subsequently, even the costs were high during those periods, because there were limited players working. Lockdown period, post lockdown effect
Correct.
was very much impacted on the industry. So now that has settled down. So now it's in a much better position, and now our focus also from a 90% chloroalkali supplier has gone down to a mix of chloroalkali come food product supplier, food preservative, food chemical supplier.
Okay.
And we are also doing a lot of research on the waste to recycling chemicals that I said. So
Okay.
it's all in the process now. For that, the first thing that we need to set up is the infrastructure for us to set up the entire processing center and the R&D center for us to evaluate
Okay.
our further expansion plans.
And understood. Hashimji, now coming to the to the value add which you give your customer, because see, we know the financials. I wanted to understand, sir, how do you ensure that for your set of customers which you cater now, how do you add little more value and ensure that they come back to you regularly for their requirements? Like, two or three qualitative assessments which you think are not quantifiable in numbers, but because of your relationship, because of your execution, because of your service. So anything special, if you could, share your thoughts, because since you all have been in the business for such a long time, two, three things which you could, share with us. How different are you, from your other players in the industry?
Sure. So, like I said, and like you rightly said, it's the goodwill and the relation that you have with people and suppliers and vendors, being in this industry for almost 30 years now. So that adds to the value, but that is after the pricing and the service that you've been offering all this while. So it's a competitive market. There is no uniqueness in the past business, but we are looking at specializing and having expertise in particular areas where we differentiate ourselves from the others.
Okay. So basically, these are the USPs which the company enjoys. Okay, understood. Now coming to the financials, Hasimji, I was seeing that FY24 has started on a good note. I think till January, whatever data is available, we have seen the company has made a profit of 76 lakhs. Previous year, this number was about 36 lakhs. So, if you could tell us, what has been the reason for this improvement? Was it higher volume growth or better prices or better
See,
cost
the
management?
primary
What was the reason for this profit increase? Which is actually taken off in a good way.
primary reason for this was the identification of the high margin items out of the portfolio that of the products that we are dealing in. So like I mentioned earlier also, that there is a transition that is going on from a chloroalkali supplier to a food preservatives and a food chemical supplier. So we are actually moving from a high volume low value product to a high value low volume product, wherein the margin
Right.
realization is much better. So in a for example, a 30 rupee product, we would get an X amount of fixed commission, apart from the volatility and the fluctuation benefit, or if at all that would be. But in the food chemical sector, the margins are relatively higher. So a 30 rupee product would not realize as much value as a 100 rupee food product. So there has been that jump that we see in the profitability, is because of the exclusive products that you're trying to introduce, wherein the margin
Okay.
realization is much better.
Okay. Understood. I think very logically answered. Now tell me one thing. In terms of typically in terms of the working capital, in this business. I mean, typically since it's a trading business, how long is the working capital? Right from the time you get the order, you execute it to the client gives the money. What is the normal working capital cycle in our business?
See, the standard traditional working capital cycle of the business is 90 days, but it varies from 60 days to 180 days, I would say, to
Okay.
be very honest. And this is barring the COVID period, that the lockdown period that we're talking about. Uh, but considering that, the average working capital cycle would be 90 to 60 to 180 days, depending on your terms and conditions with the
Okay.
buyer.
Okay.
And subsequently, you have equations with the suppliers as well. Those vary from advance payments to a 90-day payment cycle,
Okay.
depending
Okay.
on the availability and pricing.
Okay. Understood. Okay, now Hashimji, we come to the most important question of this interview. Is that we plan to go public. So, if you could tell us, what is the objective of this public issue which the company is planning to make, and how much money the company plans to raise, and typically where is this money going to be used? If you could please tell us these inputs.
Sure. See, we are planning to come up with an issue of between 12.5 to 13 crore rupees, and the issue proceeds would be utilized for buying land, building infrastructure, wherein a processing center and a fulfillment center would be incepted, and also for the fleet of vehicles that we wish to set up our own distribution network and not outsource any facility. So the main idea is to actually create everything in house with a backward integration model, which will be beneficial for us in the expansion in the near future also, like
Okay.
creating the infrastructure, warehousing, fulfillment center. Then next phase would be to get into deep manufacturing, since we would already have our own infrastructure in place and the required facilities already provided in the facilities built over 2 years. And then we will have our own fleet of vehicles where service to our clients and end consumers and reach would be within our control. So these are the benefits that we are looking at.
Okay. And typically, this infrastructure which you are mentioning, Hashimji, by when you think this is going to be operational? Like once you get the public
The
issue
land,
money? Yeah.
we've already shortlisted properties. We've already had negotiations rounds gone on with landlords and landowners, and we've also shared that in our prospectus with the identified property. So I think most of the research on the property front has been evaluated, and now once we successfully come up with the IPO, and I think the execution of that should start taking place.
Okay. So hopefully, I think by end of FY 26, that is by March 26, hopefully, this facility should be ready, once you get the public issue money.
Up
So
and
is this
running.
thinking?
The plan is to have it running mid 25.
Okay. Okay.
So keeping a
Fine.
buffer, like you said, FY 26 would be a safe note.
Okay. Okay. Now, coming to the, to the current year performance without giving a number, Hashimji, because now we are already in December. You know, typically I want to understand from you without giving me a number. Please share with me what are the kind of signals you are getting from your customers, because, this financial year is soon going to get over. So, will this current year be as similar like last year, or should we expect better performance? Because you said, the market is growing and you all have introduced a lot of high value, products. So any thoughts on that if you could share with us?
See, more or less, the revenues I would say would be at par at what the last year's financials were achieved at. But I would say the bottom line would be definitely, we are aiming and projecting it to be much better than, the last years that we came at, because the main focus right now is to get the best bottom line as possible. And,
Right.
top line revenues is irrelevant, because, marginal business growing is better than having less margin and high volume just top line revenues going on. So the main idea for us is to get to the best bottom line possible, wherein the revenues would be much similar, but definitely the bottom line would be having a much more variation as compared to the last year, because
Understood.
we've been having a lot of strategies put in place wherein the idea is to just mainly focus on profits, because to acquire a larger market share with lesser profit is not advisable for this industry.
Okay. No, understood. I think very clearly and logically, mentioned by you. Hashimji, now last question for today, which is very important. We ask all promoters. Hashimji, tell me one thing that, we have all seen COVID. Of course, COVID was, as you rightly said, that was a very good kind of time for chemical manufacturers because prices shot up quite rapidly. But typically in our business, what is the most important business risk? Like you all have been in this business for such a long time. What is the most important risk in our business, and how optimally, have you got to maintain that regularly to ensure that we always be above the water? We don't make losses, we continuously make money. So any thoughts on this?
See, risk is involved in every business, sir. See, like COVID was also unexpected, and but having said, we have the right strategies put in place as far as the risk element is concerned, wherein the exposures to certain clients or vendors is probably restricted to a particular cap. And I would say the working capital is the biggest element and the biggest risk, because you're actually running on a continuous cycle, which is planned in a 90 to 120-day traditional format. But like everything got disturbed in COVID, even the revenue shot up, even there was a good booming period for the chemical industry. But like I previously said, the cost of services had also gone up 3 times, 4 times. So there was no margin realization as such. There was top line revenue that was generated,
Yeah.
and a few vendors got lucky by getting that opportunity to work under the essentials commodity category, wherein our luckily our products were falling into. So that's the reason we were one of the very few vendors who were operational at that point in time, and that's why we got majority of the business of other traders and distributors, and we got two times the quantity and quantum from our suppliers also.
Okay.
But at the same time, if you look at the annual figures, the bottom line didn't reflect as much as the top line, because the service cost and the labor cost and the employment cost, and then work
Exactly.
from home kind of an atmosphere, was quite denting on the balance sheet.
Oh, no, I think very nicely mentioned by you. But working capital seems to be the main challenge, which you rightly mentioned. I mean, if you optimally manage it, then I think the runway for growth is definitely quite comfortable for you. So, Hashimji, thank you
Correct.
very much. We could get a better sense
Pleasure, sir.
about your company by talking to you today. Sir, please accept
Thank
my
you so
best
much for
wishes
having us,
for
sir.
you, the entire management team, and sir, best wishes for
Sure.
your
Thank you so
publication.
much, sir.
Thank you.
Thank you so much, sir. It's a pleasure. Thank you. Thank you, sir.